Like a bolt of lightning is how I always describe it. And it went straight to the whiteboard and there it was.
It feels like we've just come leaps and bounds. Like we've grown 10 years in 20 months.
In the first week of trade, we doubled the value of the company.
Yesterday felt great about the business. Today I feel average. And that is the roller coaster of business ownership.
This lovely girl said to me, good luck. And I will always remember that as the moment. Why good luck? Why is it so outlandish that there is no membership out there for a sauna? And we're live.
Alive.
What was it, 18 months we said?
It was November 2023, so a bit more than that.
Yeah, wow.
20, 21 months, something like that.
Yeah, it's pretty wild
Yeah.
to think like it feels like it hasn't been that long. But at the same time, there's been so many things that have happened.
A shitload has happened.
Yeah.
Been too busy to do this. I think we still are, but
well, somehow we're finding time.
yeah, just 20 months later.
So I think the episode that we want to do today is really just about everything we've been working hard at over the last 21 months and really try to encapsulate all the learnings because there's been so many. Like I was reflecting on it the other day with you and we were talking about Simon and like how much he's grown. And you said, haven't we all grown heaps? And it's true. Like it's an amazing amount of learnings that I now feel are full on second nature. Like it just innately, I just operate different.
I was just watching back the last episode and like, it's funny, it was only 20 months ago, but I feel like I always feel this way about looking back, reminiscing on anything I did years ago. I'm like, oh, he was such a baby, you know? Like I was like, it's just like looking at us both. I mean, you were like 20 kilos heavier or 30 maybe.
Yeah.
And I feel like we're talking about this new business we were creating and the way that we were talking about it. Obviously there was a lot we didn't know that we know now. And, you know, we've gone through the experience of building a significant company now, and actually two. And it feels like we've just come leaps and bounds. Like we've grown 10 years in 20 months.
Yeah. Hopefully we don't look 10 years older though. What would you say the one thing that strikes you or the set of things that strike you as like the key learnings in that? What made you say that you were a baby?
I think we were just, you know, we were in startup mode. We were in startup mode in the sense of like, we had never done it before. We had another business that we kind of didn't treat as a startup, that we kind of hadn't, you know, shot for the stars with. And this was the first time that we were doing that. And there was, you know, we've ended up getting really far, but I think like, at least for me personally, I don't think I really thought that I don't know how to really put it actually. I guess like I just watched it back and it's like the things that we were discussing are not things that move the needle today. Or like big picture, big business kind of thinking. It was like kind of a lot more granular and like it was maybe a little bit less mature. I don't know. Specifically, we're talking about like competition and I think we kind of had the right thoughts there. But ultimately, we just weren't like, now we were employing lots of people. We're part of a company that's like, you know, generating a lot of revenue. I think we're thinking about, you know, building multiple clubs. We're just much more mature, much more evolved.
Yeah.
I don't know.
Probably a good point just to summarize what has actually changed.
Yeah.
Because, you know, we haven't actually addressed the audience in 20 months.
Yeah.
So short story is that we operate Hustle Agency. That was the first business, right? And when about 3 years ago, we decided to launch the Venture Beyond strategy, which culminated definitely more than 3 years now. I say 3 years, but if it's been 20 months since
we opened Extra, I think it was probably about a year and a half before that we started it. So roughly.
Okay.
Just over 3.5 years, maybe.
Call it 3.5 years. Yeah. Okay. So the Venture Beyond strategy is all about looking at this great team that we had at Hustle and creating a set of principles that was going to allow us to leverage all of the insights from the agency and launch companies of our own. And that obviously started with software. And software is a tough business, right? SaaS is a real tough business. You need to have serious cash and you need to have an idea that's going to set the world on fire in order for you to acquire enough customers to reach critical.
We didn't understand that at that time, did we?
No.
You know, we did a couple ideas that were like, you know, just not exciting enough, not different enough, not unique enough that it was like a no-brainer. Like, I think that's what we learned. You want a no-brainer product, like a product that people look at and like, wait, it's like fucking awesome and it's incredibly cheap and like it's super convenient. It's like, okay, yeah, I'll do
strike
that.
a nerve. That's what I think we did with Extra, right? Like, and it came from a place of personal experience too. And that for me is like the bedrock of a good idea. Is it's if you are going to be the first customer and you believe in your soul that there are other customers out there that feel the same way as you, and you can encapsulate that into a really clear value proposition, picture of a product that people want, it'll set the world on fire. And we found that with Extra. So yeah, I guess rolling back.
Derailed you there. Okay.
Yeah. We had Hustle Agency doing okay, not really setting the world on fire there either, but doing good work.
Yeah.
You and I very engaged in like project delivery as well, which was probably bogging us down a fair bit. With the Venture Beyond strategy, it refocused us all. And what it did was it put in our minds that it is okay to think about generating new sources of income, new businesses that are exciting and that we can spend our time, our creativity on and put effort into. And the first two were reasonably unsuccessful, let's say. I mean, website to app is still around there and it has some customers, but let's be honest, it's not going to be any part of our focus going forward.
We put that one to bed.
Yeah. And then one day, like a bolt of lightning is how I always describe it. I was sitting in my office. No one was in the office, actually. It was just me and it was Phoenix downstairs. And as James said, I was like 40 kilos heavier. I was 130 kilos at that point. I was a big boy. And I'm like in like the 95 range now. And I wasn't feeling very good about myself. And I thought to myself, God, I'd love to sauna. I've always loved the sauna. I couldn't find anywhere. And I started looking for gyms that potentially would have a sauna offering as well. And there was nothing. And I made a few phone calls. And at the end of the last phone call, this lovely girl said to me, good luck. And I will always remember that as the moment that I was like, good luck. Why good luck? Why is it so outlandish that there is no membership out there for a sauna? And it went straight to the whiteboard and there it was. There it was, the idea that launched this new venture. And then I think it was one of the meetings we had after the idea was I put it out on text and everybody was into it. You sat down with me and we started talking about it. You said something to me. You said, we're not just going to do one club, right? We're going to go big on this one. And I don't think I fully had grasped the fact that I wanted to go big with it, but it was just like, that's a real turning point for us as well. Like at that point, we'd never thought to actively go really big with something.
Yeah.
Because it didn't, maybe the ideas weren't there. Maybe the concepts weren't strong enough. I don't know.
Maturity as well.
Maybe. Yeah.
Time spent.
Yeah. And when you said that, I mean, that's when it kind of started to really light a fire, I think. And we started generating all of the assets that were required to start selling this thing.
Yeah. And then I guess like the last podcast, it was November. So I think we had raised funds. We had designed it probably. Yeah.
Yeah.
We were starting construction.
Yeah.
So we'd signed a lease, etc. And then we opened in
April
2024. It started really strong and it just kept going strong.
Yeah.
And it just kept going strong and stronger and stronger. And like we budgeted what we budgeted, we smashed and it just kept going. Yeah. And we were like, holy shit, we got something here.
Yeah, exactly. I mean, I think really exemplified by the fact that it was easy to raise the first seed funds. And that, I mean, generally shouldn't be easy to do that. But to be fair, I also think we need to put it in context. Like it's not really a good thing to put that message out there because it wasn't easy. It was a lot of hard work. But the thing that was easy was the concept was really strong. The way we executed the early stuff was very validating. Like the fact that we had hundreds of people buy the product way in advance, actually purchase with credit card payments, made the sale of the equity really quite straightforward. And then the fact that was easy, then going into the execution of the actual product was hard. And finally exemplified, like I was saying, by the fact that in the first week of trade, We then were approached by the firm that invested a large sum of money in a time where we were told it's impossible to get money. Like we doubled the value of the company on paper, obviously, the enterprise value doubled in the first week that we opened this thing.
Yeah. And
that to me is just incredible, right? Like I think having the wherewithal as well to know, to back ourselves to remember the first offer was nowhere near as good.
Yeah.
And backing ourselves and being like, no, this is something big.
Yeah.
You know, those are kind of some of the maturity aspects that come with
yeah,
experience.
we really like, you imagine what it's like to start a new business. I feel like we got so, we just ticked all the boxes, and it far surpassed what we probably could have expected with the launch of Extra, which is really cool. And I think, so just to continue recounting what's happened, we opened. It was successful. It was April when we opened, and now we've opened our second club about 4 weeks ago or something.
About that.
Six weeks ago. Yeah. What day was it? It was the
20
that we first opened the doors. So it took us another 14 months to actually open the next door.
Yeah,
which is which was kind of humbling.
It was actually,
like, after like the rapid success, the raising of further funds, all that kind of stuff, it felt like we were just going. We're like, we wanted to do 2 more last year, and then reality kind of hit.
Yeah. What were the realities actually? What you could summarize? I
think we were very ambitious, and that's great. I think it's also really good to take your time to a degree, and I think that was it was good that we didn't just go and build 2 more last year, because we probably would have fucked them up, and like not taken all the learnings that we have taken into Green Square, and been left with a bunch of issues that, similar to what we have at Bondi Junction. Because as much of a success, and this is an important thing to recount as well, as much of a success Bondi Junction has been, it's also was our first club, and we didn't know how to build it perfectly. And for that reason, there are a bunch of things that we, wanted to fix with Green Square, which we have, and issues that we have, legacy issues that we're going to be carrying forward. So I think the reality was that I think the incoming board member also was a bit of a reality check, like smart guy, done it before, good advice. I think he was part of the reason we kind of took it a little bit slower. I think the deal that we were closest on and almost completed got pulled away from us at the last minute, if you remember Parramatta, because a bigger fish came past and just like literally on signing day took it off our desk and killed the deal. What else happened? The difficulty of building in general. Like Manly has been meant to have started a year
ages ago,
and we've been slowly kicking that can for a long time.
Yeah, but that's lease negotiation too.
But it's lease, and it's also building from the lessor. To put in the lift and all that kind of stuff.
Yeah.
So yeah, I mean these things happen, and it turns out it's not really easy to go and build a lot of these things. Also, we found out how expensive it is to build the club that we know we need to build to deliver the experience that we want to deliver moving forward, such that we are continuously ongoing a no-brainer decision.
Yep.
Being that it's an amazing facility, unlike anyone else's facility, like way above, a cut above, and at a more affordable price point, and in a really convenient location.
Yeah.
So I think, so all those things came together to mean that we weren't able to move as quickly as we thought we could have, but ultimately I think that's for the best. The other reality check, I mean, I already said build cost, but just financing in general, like coming up with money. We got investment, but like that investment didn't take us very far.
Yeah, well, it got us the next club. Got
us the next club.
Yeah. If you think about when we took the investment, we thought that our cost for a new fit out was X, without telling the whole audience what the price is. It ends up being 1.5 times X.
Yeah.
Or maybe a bit more.
Yeah.
So, and the reason it ends up being that way is because we care deeply about the quality of the experience, right?
Yeah.
And actually, this is a really interesting thing that we've had to contend with going through this process. We're in a blue ocean market, and by blue ocean I mean we have very few competitors. Of the competitors that we do have, there are probably two strategies you'd consider that actively happening in the market right now: the franchise approach, the wholly owned, very luxury approach.
Yeah.
We sit in the wholly owned but affordable luxury, and we're the only ones really doing that. What we've had to contend with is not only the operating of a completely new entity and understanding how to launch this business, make it sustainable, make it high quality, but at the same time contend with the idea that we should be launching more clubs with a different business model, a franchise model, for example, because we've got other players out there that are doing that and more rapidly putting clubs in market than we can.
Yeah.
Because of the capital structure.
Yeah.
But we're unwilling to do that because we will not let the brand deteriorate like a lot of franchise operations do.
Yeah.
And it's been interesting to see what values, what qualities we value highly and like stick to that, because I think when we first launched the business, we wanted to deliver an incredible product, and we've done that, but it's stayed with us. We're not just here to build a big company, make a lot of money. We're also here to actually deliver something we're proud of. And so that's not to say that franchise operators don't deliver things they're proud of, but it's just way more likely that we're going to get the outcome that we're looking for if we're more tightly controlled and thinking of this brand as a cohesive organization.
Yeah.
Yeah.
Definitely. Yeah, I think we're on the right track. Who knows?
Yeah, we don't know.
It constantly changes. I think that's the other thing that this last year and a half has kind of shown me is, even though we've had success in inverted commas, like we're still like, yesterday felt great about the business. Today I feel average about the business. And that is the roller coaster of business ownership. And I think you got to remain vigilant, and you got to keep trying to evolve your product and improve everything that you're doing, because otherwise it starts to slip.
Yeah, for sure.
And yeah, there's definitely a lot of maturity being gained in the last 20 months or whatever it's been in riding those waves, and just keeping focused on the end goal.
What are the things that make you feel bad about the business?
If I don't go enough.
Yeah, right.
I think if I don't get there enough, it's easy to be at the head office, like behind a computer, looking at our NPS score and feedback from customers, and being like, shit, it's not good there today,
Yeah.
Or like looking at sales and being like, oh, we're a bit off today. I think getting stuck in the daily minutia and not actually going and being there and feeling what the experience is, that can kind of eat away at you slowly and start to make you feel uncertain. Also, like emerging competition, and it doesn't make me feel bad about the business. It's cause for concern. It's cause for action. You don't just get concerned and, worry. You got to get concerned, understand what the concern is, and understand what you can do to respond to it. Like Sai and I went to Parramatta today, and we looked at a property there, and the property is currently a gym, 1,000 square meters, and they have a sauna and a steam room in there. It was a shocking sauna and steam room, but they have one. And for, your average punter who maybe doesn't need a fantastic sauna all the time, that probably suffices. Virgin just opened today, was it? Yesterday?
Yeah, yesterday.
And they've got a recovery wellness area, which that will take some of our customers. So,
yeah, we've already seen that.
Yeah, we've already seen it. So there are constantly these challenges emerging, but I think it presents opportunity. Like Sai and I were talking in the car about how we're going to respond to this emerging threat of additional competition through gyms adding sauna and steam and ice. Just to note, though, obviously this, but it's very hard to do what we do and do it well. Like gyms are going to struggle. Their sauna's not going to be as nice. Their cold plunges are probably not going to be, New South Wales health compliant, but nevertheless, it will take some of the market share. So how can we respond? And that's the question that I think as an entrepreneur, you need to be asking yourself, as opposed to just looking at it and feeling defeated. You got to look at it and think to yourself, like, what can I do to compete even harder? And like we were talking about how we got to start introducing things like special sessions, like guided classes and all that kind of stuff to our business to make it is already very repeatable, but also make the occasional session really special. That alongside a lot of the stuff we're doing from a tech perspective, alongside potentially introducing things like, I put this in the whip chat today, like annual pricing or biannual pricing. So giving people the ability to get a even more affordable price, but giving us a commitment. Because right now we're practically zero commitment. So I think what makes me, the question was, what makes me feel, bad about the business? I think it's just like it's not bad about the business. It's just probably more just like a general like concern about this ongoing success of it. That is like a healthy level of concern to have about your business when you're running a business. I never feel bad about the product because I think the product's amazing. I think we're helping people. We're providing an amazing product that makes people feel better. I never feel bad about the product. We're not a gambling product. We're a feel good product. So
yeah, you can sleep easy.
That always feels good. What about you? Do you ever? I know you worry about it a lot.
I mean, I worry about business all the time. I worry about everything. But no, I mean, look, there are things that cause a visceral reaction for me. And I think that's the way I've always reacted when the unexpected happens, but over the years, you get better at dealing with all of that, right? I think that's where, when I get the visceral reaction, it's actually a really good thing. Like, it's a good behavior, because what it does is it makes me stop, think about why I'm upset. What is it? And I identify whether it's something I need to actually address. I never used to do that. I used to jump. Whereas now I do take a moment, and then I let it percolate. And if I see things that become a trend, because I'm all over the data. That's like I can't stop. It's almost like that tweaking in the back of my head. It's like I got to
see you checking the revenue just before
exactly.
mid podcast.
Yeah, I can't help but be around the data. I do obsess over that. But the visceral reaction comes, and it does give me a chance to reflect on whether I've seen this before, this issue. And that's when I start to uncover trends. And it does sometimes lead to good insights. Other times it's a really a self-regulating thing that I have to do to be like, okay, look at the big picture, consider the big picture, all of those things.
Yeah.
The other part to it as well is this is the first time that we making big money allocations at once in a short period. And a lot of those money allocations are relative to a forecast that we believe to be pessimistic but achievable, and more like closer to realistic than pessimistic, I should say. And we want to try to hit that.
Yeah.
We've done it before, and we want to try to do that again.
Yeah. So and if we don't,
there's consequences.
There's consequences, and that's heavy.
Yeah, for sure. So that's part of what goes through my head. But the thing that makes me feel bad about myself in relation to the business is if I feel like we can't move fast enough. And that's when I put unrealistic expectations on myself, and I don't like doing that, but it is part of the whole thing. It's part of being in the role. Is you always want, like, if I think something is going to solve a problem, and if it takes us more than a day or two to get it done, that's where I start to really feel bad about the business, because I know, like, there's always inadvertent or like unexpected consequences from the decisions you make. And when we impose a decision upon our customers that potentially needs to be resolved, and if that takes too long in my mind, then I think that that's on us,
Yeah.
And that's when I start to feel bad about it. Outside of that, when I'm looking at like the variation day to day, yeah, it doesn't make you feel great, but we still haven't had a day where we've not made a net profit, right? So for example, yesterday, full disclosure, it was a shit day, but we still made a net profit.
Yeah.
So,
albeit small, but we did.
Yeah, exactly.
Yeah.
We eked out a net profit.
Yeah.
And, I think that's a testament to a great product, all of those things. And you need to recalibrate your expectations regularly, because businesses do peak and trough.
Totally.
Yeah.
And we had such a peak. We were riding a peak for ages.
Yeah.
And now we've got to dig our heels in and find that again. I mean, we're not in a trough, but I mean, compared to where we were, I guess we are.
Well, we shot the lights out. There was 3 months there where we were just shooting the fucking lights out.
Of this year, you mean?
Of this year, yeah.
And all of last year.
All of last year. But look, I mean, in relative scale, we're making more money now than last year, though.
Yeah.
Right?
Because we've got 2 clubs.
No, not because of 2 clubs, but at Bondi Junction, it's making more money today than it was this time last year because we only just launched the business, right?
Yeah. And it's had that incremental growth.
Yeah. But if you compare the 3 months of holy shit, what is going on here? Isn't this awesome?
Yeah.
To where we are right now, it feels like a failure.
Yeah.
And that's the hard part.
Yeah.
And we're talking like,
10%.
15% probably.
15. It still feels shit.
Yeah, okay.
But you've been riding the high. You're like,
you're up here when you. Yeah. So, like I said 2 days ago, when we were looking at the numbers, it's like we dramatically exceeded our expectations.
Yeah,
and that became our new norm.
Yeah.
Now the norm is what we had forecasted. So we've just got to be careful that we don't lose sight of all of that and move quickly. I mean, within reason. You also don't want to move so fast that you end up making mistakes because you're moving so fast.
Yeah.
So it's that balancing act and being conscious of it.
We've gone pretty long already, but a shitload has happened like that we haven't touched on.
Yeah.
But probably the only other thing we need to, I think, address in this one is hustle. We've spoken a lot about Xtra.
Yeah.
But obviously hustle's changed a lot and it's been a really successful last 20 months for hustle as well. What do you think? How would you summarize it?
There's a big learning to be had about hustle. Hustle 24 months ago was in strife. Real strife. I wrote a memo to you one day because I saw the writing on the wall. We were going to be in big doo-doo. And we were for a little while. And the biggest things that I identified in that memo was we didn't have a way to acquire new customers. So we were stagnating in revenue. We had a team that was very focused on the new venture, but also and importantly, needed to be remunerated more because they were getting long in the tooth for the role that they were in. We had no hierarchy outside of James and Anthony run the business and everybody else works for them. We didn't have any incentive structure. We had no structured way to bill our clients. There were a lot of problems, a lot of real fundamental problems. And what I
can't believe how we were billing, the simple, how do we make revenue? It's just like, man, we just kind of have a system, but we
had tracking time through ClickUp, but actually invoicing required somebody to go and look through the lines, check it,
and retrospectively,
exactly,
as opposed to preemptively.
Yeah, exactly. So now we have forward revenue, and everything is tracked automatically, and everything is invoiced automatically, and we have increased everybody's salaries. We've gone well and truly above that, but also we're now making a profit in hustle. Because for 2 years there, we lost money.
Yeah.
And by focusing so heavily on Xtra, we were losing heavily at hustle. So to be back in the black with hustle is awesome. And especially it being a good number that has set the foundation for the future. We look at hustle now as a venture. I mean, the ads that we did I made $1 million in 5 months. Actually, I said this to a good friend of mine this morning. If it all didn't go well, we'd be in a shit spot, a real shit spot. But it went well, so both companies are thriving together.
Yeah, they're feeding off one another.
Yeah.
I mean, he put it well this morning when you were talking to him because I was on.
What did he say?
Speaker. He was like, oh, so Hustle was able to make Xtra success by using the team, and building the tech and helped you raise the funds. And then because Xtra went well, that's helping Hustle perform really well because it's all about how we launched Xtra. And I think there's there's a real unique kind of positioning for clients to be like, oh, these people actually didn't just do client work. They did their own thing and have made that successful. And now they're just, I guess Xtra fed off Hustle and put it in strife. But now Hustle's feeding off Xtra's success and they're kind of both been lifted up
100%,
which is amazing. It's like you and I think for me the biggest difference is 20 months ago, whatever it was, you and I were doing all the work, well, not all the work, but we were doing a lot of the work at Hustle and we were the leaders in the management completely. Now we don't do, I especially don't do much of any work at Hustle apart from just leadership and strategy with the new management team. And you've taken a big step back on execution as well. And we've got another a whole nother business with like a whole nother team of 14 people, but yet Hustle is doing a lot better, and that is like just a massive success.
Yeah,
I think
it's a huge turnaround.
a massive turnaround compared to where we were.
Yeah, it's process software that we built ourselves, which for our use case, so important.
Yeah.
Team growth and growth in the roles and the management team that's come with that. Incentive structure.
Yeah.
Clear metrics that drive performance. Like it's all basic stuff that we just weren't doing.
We didn't know. It's like incentive structure, like company structure and like constitution, shareholders deeds, all this stuff that we've learned over the last couple of years. It actually makes such a big difference. It's like
huge.
crazy. You can just be like a sole operator type person, just like working your ass off and like charging yourself out even at a good price, but like you're still just selling your time. You're not selling your smarts.
Yeah.
And I think like putting in all these kind of processes and procedures and incentive structures and management teams and hierarchy and all that kind of stuff, it genuinely works from our experience so far, at least.
100%.
Yeah.
Yeah. The growth has led to us being in a stronger place. And from here, like I said to you today, I think we're doing our best work. And it's something I keep saying to the team, especially to Adam. I keep telling him that work product is not value creation. And what I mean by that is that every time I get on the tools to do the work, I'm actually not creating value for the business. I'm just delivering work. And that's true at Xtra too. Like, we never run a shift. So why would I get on the tools at Hustle?
Yeah.
It makes no sense. The only time I should do that is in a case where I'm actually working on the Hustle business.
Yeah. It's funny. We never even thought that we would do shifts at Xtra. We just set it up right. We just didn't, that thought never even entered.
Never crossed.
And it's funny how like when you're doing something that like is your core skill, you kind of get in your own way in doing it right.
Yeah, but that's because it's so easy to launch these businesses, right? Like when it comes to service-based businesses, if you are good at the service, you start by employing yourself.
Yeah.
And then you gotta break away, and that's what we've done.
We did the breakaway.
Yeah, exactly.
Yeah. And it's made a big difference.
So where to from here? Yeah, we're launching 2 new ventures, and we're taking all of the insights and the learnings that we've had over the last successful venture and embedding it into these 2 new products, which gives the team the opportunity to engage again in ESOP opportunities, which is something we didn't talk about, but it's pretty awesome that, we were able to incentivize the Hustle team with employee share option plans in Xtra, and we actually gave them the equity, which was incredibly hard to do, but it's awesome that we understand how to do that now. Yet another learning.
Yeah.
But the nature of what we're doing now is really about value creation. And I think there's going to be a lot of, I've lost my train of thought.
Oh, just like you're talking about new ventures. I think it's going to be interesting to see how many ventures can 2 people run at one time.
Yeah.
We've got 2 so far.
Well, actually, that's where I was going is that the long-term goal, right, with the whole Venture Beyond strategy was by the time I'm 40, I just want to be in the chairman's seat, the MD seat of these companies. I don't really want to be running it day to day. That was the whole thinking, and I think our partnership, the way that we work together, the way that we zone in on one thing and then split activities and then come back together to see the outcome, I think we can get there. I don't see why we can't have 10 ventures running at one time with the right management team in place.
We'll see. By the end of next year, it'll be probably 4.
Yeah,
it'll be a good
test.
Good test, definitely. I think we've got. I mean, you just keep learning stuff. You become better and better at it. And like we went from 1 business to 2, and somehow we have more time and we're more productive. So why not again?
Yeah, and correlation, causality.
We'll see. But like with all the processes and procedures and smarts we're learning, I think we should be able to spin the plates, but it'll be a good experiment for sure.
Fingers crossed. So when are we going to be back on the pod?
I don't know. Let's do it more often.
Yeah.
Every few weeks.
Every couple of weeks.
Yeah.
Let's try that.
Yeah, because it's really hard to recap, like there's so many things that happen in that time period that would have been great to talk about if we had this room set up. You know, we got the room now.
Mm.
We've got the chairs. We got the kit.
Yeah.
We got Odin.
We've got
Thanks,
Odin
Odin.
over there. Yeah.
So let's just like,
Let's do it.
Just do it. Let's just chat more often. We can get Sai in. We can get Dad in. We can.
Yeah. We'll bring some people in too.
Yeah.
All right. Well, until next time, we'll see you soon.
Peace.
That's the pod.